Last month, we looked at the company TPL, Texas Pacific Land Corporation, and the stock already gained 50%. Today, we are going to address a few questions. Why the stock is up so much? What should we do now? If, of course, you own the stock, maybe you want to know if it's time to take profits or just keep it. If you don't own the stock, was it too late? Or maybe it's still time to buy. And also, we are going to look at the alternatives to TPL, because if you miss this opportunity, there are others in the market. We have to understand them. First, let's try to understand why TPL stock is up so much. As we talked about last month, this is one of the most interesting businesses I have ever analyzed. The business itself is one of the most efficient I have ever seen, because it comes from a company that went bankrupt over 100 years ago, a railroad, and it inherited in a way all the assets of the railroad. And these assets today are on the Permian Basin in Texas, which is one of the richest oil regions in the world. And there are three ways that TPL make money. The first one is, of course, through oil royalties. Since they own the mineral rights on oil, they can sell these to oil producers, for example, ExxonMobil and Chevron. All these companies are going to produce the oil and give a percentage to TPL. And there are several other companies doing that, oil royalty businesses, but they own just the mineral rights. What makes TPL different from the rest is that they also own the surface rights and the water rights. What do I mean by the surface rights? Is that they don't own just what's coming underground, but also the surface. They actually own the land. And if you're going to extract the oil, you have to build your infrastructure, for example, roads. You have to build the wells and everything on the surface. And it can go beyond oil, data centers, windmills. All these things can be built on the land owned by TPL, and they make a lot of money from this. It is less correlated with oil prices since they are not making money directly from oil. And they also make money from water because they have the rights of the water that comes from underground where they own the land. To do fracking, there's a lot of water involved. They make money from that. This is one of the reasons why the stock price of TPL went up, because Donald Trump got elected, and it is expected that there's going to be more oil production in the Permian Basin in the United States. And TPL definitely is going to win from that. Higher oil production means prices are going down. Oil prices are probably going down. This is the advantage that TPL has over the competitors, the mineral right companies, the one that only operate oil royalties. For them, if oil prices go down, they're going to make less money. In the case of TPL, yes, they are going to make less money, but also because there's more activity, more production on the surface, this is going to in a way counter the negative impact of lower oil prices on TPL. They have this big advantage over the competitors. The second reason why the stock price went up so much is because the company got added to the S&P 500, and now all these indices, index funds, hedge funds are going to buy the stock. And it also made the stock popular for everyone to learn about it. Many people didn't know about TPL before, but now they know about it and they are going to invest in it. For us, for investors, we look at it 1 month ago and we say that it was overvalued. Even back then, it was overvalued. We already talked about that. You can find the whole analysis on the Superinvestors Club. If you're interested, you can find all my analysis there. You can find all my research. There's an investing course for beginners, an investing course on how to read financial reports. There are more courses I'm working on. You can have a free trial if you're interested. I'll put the link in the description. It also helps this channel survive and grow. TPL was already overvalued. It's not because people are buying more of the stock that we need to cry about it, that we missed an opportunity. No, nothing happened. If you did not invest in the company, you're not wrong. It's just, it got more overvalued. There is nothing for you there. If let's say it was undervalued and you did not buy, then maybe it's a good reason to cry. You did not act on your analysis. But there, our analysis showed that it was overvalued, and most people would agree that it was overvalued. It just got more overvalued. I don't think this is something that we need to cry about, we need to be unhappy about. What about the alternatives now? The company that is the closest to TPL would be Landbridge. And even for me at the time when I looked at Landbridge a month ago, I said it was overvalued, and it still is. There's something I have to wait with Landbridge. I need to know, the company just had its IPO a few months ago. I need to know how many shares outstanding there will be, because there are two classes of shares. Some are owned by the insiders, which have only voting rights, no economic rights. Usually we don't count this, but because there is it's always the possibility of conversion which will take place. As from December 25th this year, we need to know how much conversion is there going to be to know how many shares outstanding there is for Landbridge. But TPL is much better than Landbridge because TPL did not acquire any land. Yes, they are acquiring now, but it's not that much. Most of the land that they own is from 100 years ago. On the balance sheet, the value of the land is zero. It is not even counted because it's from a bankruptcy over 100 years ago. But Landbridge, they have to make the acquisition. So there needs to be capital invested to grow the business. It's not as simple, as efficient as TPL. And also Landbridge doesn't own any mineral rights. It's just the surface and water. You could, of course, always look at the oil royalty companies. My favorite one is Viper Energy. I've talked about it. You can watch the full video if you're interested. Have a nice day and goodbye.